Hi, I'm David Kelley. I'm the president and CEO of Chakana Copper. Chakana Copper is a junior explorer focused on the Soledad project in Peru. We announced our initial resource on our discovery there in January. It's high-grade copper, gold, silver, starting at surface, hosted in tourmaline breccia pipes. It's in an active mining district within the Ancash province of Peru, which is also home to the Piarina world-class gold mine that Barrick operated for a number of years. And it's also home to the Antamina mine, the largest operating mine in Peru. So we're excited to tell you about our exploration program this year and where we're headed with this project.
Good. Okay, David, the reason we're talking today, I want to talk to you about drill program. I think you've just kicked it off, and also you announced recently the 7 million private placement. I do want to talk about that. I will point people, though, to previous interviews that we've done. You can find those on YouTube, or if you're a member of the Crux Investor.com club, you can find it there. Along with various articles as well. So we're not going to cover quite a few topics today. We've talked about Peru, doing business in Peru previously. We've talked about the projects technically and otherwise previously. We'll put links to those below. Today, right, let's start with the money first. That's always the important thing. So you announced 7 million private placement. How much of that have you actually closed?
We closed 5 million right off the bat in the first tranche. We're working on the second one. That will be closed soon. So in these very, very difficult market conditions, I was really thrilled to see the response to that financing. Gold Fields jumped in right away. We've had a number of other significant investors come in. A lot of our existing investors participated, and then we were able to bring in several new investors, which is always exciting for me.
Right. Okay. Well, is it a case of in for a penny, in for a pound, as we say here in the UK? The sense that the existing investors, they need this to work, and they believe this can work. Clearly, they wouldn't have followed their money. But if I look at some of the highs of where we're, in the 40s, averaging in the mid 30s, most of the last 12 months, we're down. Here we are down at 12, 13 cents. It's really difficult times. So they're getting a good deal, I guess they would look at it. But for you, that was an expensive raise. Why not just hunker it out?
Yeah, it was an expensive raise, and it was painful for me to see that we're financing at these levels. I mean, it's an exciting time for new investors to come in because they're essentially getting to invest in a de-risked project that's already demonstrated what its potential economic impact could be with these tourmaline breccia pipes. But on the other hand, going back to our existing shareholders and wanting them to participate, if you're going to get diluted, you're better off diluting yourself. And so we had a number of investors that chose that path. Management, our management team and board put in $243,000 ourselves. Gold Fields came in at $900,000 again in this financing, so that puts them up to 12 million since the start of when they initially invested in the project. So I think that goes a long way. I always say that good projects win out in the end, and as long as your project you keep adding value through the drill bit, this project is going to work out really well, and I think it's going to reward our investors.
You made me smile there because I think one of our members on cruxinvestor.com put up a chart of how much management teams had invested into their own projects. You put a meaningful chunk of change into this deal yourselves, haven't you?
Yeah, it would surprise me too, because there's a group that follows insider trading, and 2 weeks ago we were number one on that list.
Yeah, I saw that.
If you include Gold Fields and all of management, we were at 1.1 million invested in this financing. So, and you have to look at the pedigree of for Gold Fields to stand up to the plate 3 times the way they have. I mean, they know we're on to something. They see the potential here. And not only that, this workshop I just mentioned that, we ranked all these targets at, we spent 3 days with Gold Fields, and they brought 5 people. And these are the best people from their global exploration program. So, to dedicate that kind of time and resource to come in and help us get this right technically, it just shows you what they think about the potential of this project.
Yeah, no, I think it's a point worth making. It's because it's something that people should look to. Right. So without wanting to be a kind of fanboy on that front, let's get to the meat of this thing, which is right. You've raised this money for a purpose, and that's drilling. You started the drilling. You talk about 13 new targets, and this is the bit I'm intrigued by. It's like, you've done a whole bunch of drilling to date. You've had sort of, mixed success, some success, some not. You've put out a resource. You say you know a little bit about this. Why are you going after new targets? Why is that the best strategy?
Well, it's a great question because, we could move forward with development of what we found so far. We found 6.7 million tons with the copper equivalent grade of 1.88 or, 2.77 grams per ton gold equivalent. If you look at the higher grade cutoff of that, there's 3.3 million tons of 2.75% copper equivalent. Some very, very high grades, including the massive sulfides that we've drilled. So we could dive in on that right now, but when you look at the small percentage of targets that we've tested so far, we've only tested 12% of the targets, 155 total targets, and we've tested 18 of those. The scope and vision of this project could change dramatically with additional discovery, right? This could be a tier one discovery. That's why Gold Fields is there. So it doesn't make a lot of sense in our view to jump in on the development of a small resource when the upside potential is right there and ready to be tested. So we felt that the best approach that we could do for our investors is to go out there and get aggressive, be bold, and test some of these step out targets. And so that's what we're doing now. We've got enough money to get out there and test 13 new targets with the drilling that we're doing now. That drilling kicked off yesterday. That's all focused on the north side of the project where we're fully permitted. And we're working hard on the permit for the south side. It's well advanced, but from a planning standpoint, we plan to move to the south side next year and test the target potential there. And at the end of that exploration, Matt, we'll be in a very good position to know what this project's going to look like. Is it going to be a small underground high grade operation? Is it going to have an open pit, bulk mineable, very large tonnage type of development opportunity? We'll have a much better feel for the direction that this project needs to go.
Right, but so just talk to me about, why is it 13, not 7, not 10? Why 13 with the money that you've got? Because it kind of feels to me like you've got to do something which allows or gives you the data or the information to be able to put something meaningful into market. Because you're going to be asked the question about what's the catalyst moment, what's going to move the share price. You're going to get asked that question, and if you don't deliver to that, we're going to, maybe it's going to be hard to get out of this position you find yourself in. So why that amount, and why focus where you're focusing?
Well, one of the things we learned from our initial resource was that there were 7 breccia pipes in there. They all had an open pit part of the resource and then underground. And there were 3 really big pipes, breccia pipes, that hosted, 6 million tons out of the 6.7 was hosted in 3 of the pipes. So there's 3 big ones and there were 4 smaller ones. And there's every opportunity, geologically for those skinnier pipes or smaller pipes to add bigger tons of depth, because we see this increasing size as we go deeper. All of the pipes are open at depth. But we went back to the drawing board and said, okay, what do we know about these 3 big pipes? Do they have bigger geophysical signatures? Do they have multiple geophysical signatures? In other words, can we see that same feature in multiple data sets? And we went back and worked really hard to try to refine our targeting criteria. And we came back and said, yeah, absolutely, we can see a very, very robust parameter response to these bigger pipes. So let's go out and look for those bigger signatures. And that's where the 13 comes from. We're trying to get better at what we're doing. And that you always want to see that if you're backing an exploration team with your investment, you always want to see that they are trying to get smarter and better at what they're doing. And they do that. At the end of the day, this is a scientific endeavor, right? It's not research. You're not trying to do esoteric type of things. You're trying to do applied research that makes you better at doing what you do. And we've done that. We've applied the best geophysical approach. And that was fortuitous for us because we were able to have access to Andrew Foley, the chief geophysicist at Goldfields, who is one of the best in the business as far as I'm concerned. And he's dedicated a lot of his time to designing the geophysics, and then he's done all the modeling that's led to the selection of these 13 targets to be tested. So the reason we have 13 is because we think these are the 13 that could bust this project wide open with successful exploration.
Right. So talk to me again. Is it going to be relatively shallow drilling as per before? And, in terms of what's the kind of sequence of events in terms of timing, but getting information into the market, right? Because if it's going to bust the whole thing wide open, that's a bit exciting. It's a big statement, right? But how do we see that slow progression over time with $7 million?
Well, the other thing we learned in our previous work was that we can get away with a lot fewer meters to test these targets. So we've also tried to optimize how can we test as many targets as we can with as few meters as we can, so that we can stretch the drilling meters over a broader list of targets. And so, most of these targets are going to be tested with 1 or 2 drill holes, optimized to get below oxidation where the sulfide should be and hit the heart of the shallower extent of the anomaly. We know that this mineral system is vertically extensive, right? It goes at depth. So there's no real reason for us to drill deep holes. We just need to get onto the top part of the system, and then we know that it's open at depth and it's going to continue. So our focus is shallow testing, maximize the number of targets, and then we'll be in a position. Let's go out and test these 13 initial targets, step back, see what we've got, and then we'll know where we need additional drilling. We're not going to do any inferred resource drilling at this point. But we will have additional meters we can deploy, and it's a question: do we deploy those on new additional targets beyond the 13? Do we go back to the successful hits in the original 13? And we're also keeping our eye on this south area and how that permit is progressing. And we want to get down there as soon as we can as well. So we have a number of really exciting targets on the south side, including a very, very large intrusive hosted bulk mineable type of, we call it the mega gold anomaly. And Merlin and I talked about that before. We want to be down there testing that as soon as possible. But right now, focus, let's get out there and test these 13 targets. Let's see what we've got. And so what the market will see is they'll see a news release with, 1 or 2 or 3 targets that have been tested, what the results are, and while we're still drilling on additional targets.
Okay, so bust this thing wide open, big statement. You said we know from the drilling we've done in the past that we don't need to drill so deep this time, so saving meters, saving dollars, and therefore testing more targets. What are the other things that you've learned to do previously will be applying with this campaign? Because it's kind of like you don't want to be seen to be doing shortcuts, because we're going to have to extrapolate the data that you put into the market to try and work out what it is that you've got, because grade is not your problem. Grade is far from being your problem. What you've got to demonstrate is scale to this thing, right? So in terms of that, being able to produce data with which we can extrapolate and get a sense of the scale of this thing. What are you trying to find, and what are you going to be able to talk to the market about?
Well, therein lies the rationale for where we came up with the 13. Our understanding of the structural controls on where the breccia pipes are located has vastly improved with the geophysics. The shape and size and volume of these geophysical anomalies being related where we have a laboratory, right? We've got 7 breccia pipes that have been drilled out. We've got all this data, and a lot of this data is new data. Since we did our original targeting, we now have a very detailed ground magnetics data set. We have a gradient array IP survey over the entire extent of the tourmaline breccia pipe field, which is 12 square kilometers. And now we have 35 individual 3D IP grids over every single significant target within that 12 square kilometers. So that's a tremendous amount of data. And we've been able to put that together, understand the structural setting a lot better. And you can step back and look and say, okay, big pipe, big pipe, big pipe, big geophysical signatures, multiple geophysical signatures. And then you look around and you see all these untested areas, and that's where we're focusing on. So that's again where we think we're smarter with the target selection to begin with. And we do need to scale it up. And this is all about scale at this point. As you mentioned, we've got some great grade. Every one of those breccia pipes that we did drill has high grade zones in it. So we know if we just find a mineralized breccia pipe, we will find grade. But the question now is, how can we scale this up? And by going for bigger targets and being, I guess, maybe more aggressive in testing our ideas, that's where I'm excited to say that we could bust this wide open with this next exploration round.
So how do you feel about the market at the moment? Because we've seen commodity prices go on a tear up until recently, right? Up until recently, whether it be nickel, copper, any of the battery metals, I guess, copper and silver being the sort of two for you. But precious metals maybe has kind of been flatlined a little bit. Zinc's down meaningfully, 20% or so. And then, of course, the equities markets are in turmoil at the moment. So you've raised the money in a difficult space, and you managed it relatively quickly as well. I thought that was quite interesting. Maybe because it felt like a real deal for everyone involved with it. But how do you operate in an environment like that? Like I say, I've tried to kind of get you to explain, like, you've got to drill for headlines in a way, and you've also got to try and drill for data which we can extrapolate and say, oh, the scale, the thing which is possibly missing from this story so far is there. So what are the conversations that you've had when you had Goldfields up here for 3 days? Were you just looking at, hey, let's just focus on the drilling and let's stick to what we know, don't worry about the rest? But which if you said that, I'd go, okay, fine. But the reality is that you as a CEO have got a bigger responsibility, to your shareholders, to say, well, look, where is this growth going to come from? Can we be 100% reliant on the drilling? And if there's anything in the drilling that we can affect, which could change some of those headlines. So what are those conversations you've been having?
Well, the way we tried to set this up, and the reason we did so much drilling before is, we had to demonstrate to the market that these breccia pipes are significant, not only from a grade ton standpoint, but also from a mineability standpoint. One of the most frequent questions I get asked is, how are you going to mine these things? And it's interesting. I don't get asked that from the mining engineers. The mining engineers look at it and go, wow, this is beautiful. You got multiple vertical breccia pipes, very in close proximity together. You've got a hillside so we can drive tunnels instead of expensive deep shafts, that type of thing. This looks like a dream. I had one mining engineer call this. He said, this is going to be, a very easy mine to operate with very few people, because sub-level mining is you can get very high production. You can have multiple pipes in production at the same time, and you can do that with not very many people. It's a very efficient type of mining. So, but I get asked that question a lot from geologists. They look at this and go, well, I don't know too many multiple breccia pipe mines out there. Well, Diavik is one. The kimberlite pipes are often mined in the very exact same way that we're talking about here. Multiple pipes in the district. They take the tops of the pipes out with those small starter pits. They go underground. They integrate their underground infrastructure and their haulage and ventilation between the pipes very efficiently. So it wouldn't be much different than that. But for us, we tried to set this up. So let's go out and learn as much as we can about the first round of pipes we've discovered. We've drilled them out. We've got an inferred resource. We have mining engineers that tell us those can be mined as long as all the economics work out. So let's start doing the math. Okay, well, how many breccia pipes do we have? We have 7 breccia pipes. There's roughly 7 million tons. So you can think of it just in simplistic terms. If you have If you have 20 breccia pipes, that might be 20 million tons. Well, they're open at depth. What if we can double that? That's 40 million tons. What if there's 50 pipes? What if there's 100 pipes? What if the pipes coalesce at depth? What if they come together in this concept of mega breccias, right? These things are coming off of an immense energy source at depth, right? There's a very, very large intrusion, and these breccia pipes are erupting off of the top of that intrusion. So as you go deeper, you're getting closer to that energy source. The closer you get to the energy source, the more damage that intrusion could do. And damage, I mean explosive brecciation, fluids permeating into those very permeable open breccias and mineralizing those breccias. And we've already seen that. We've seen small breccia pipes at surface coalesce into much larger breccia pipes. What if the breccia pipes themselves coalesce into what we call mega breccias? So those are some of the exciting targeting concepts that we're applying now. We hope that the market will be able to say, okay, if we've got 2 drill holes and a new breccia pipe discovery, maybe that's another breccia 1. Maybe that's another 2.5 million tons. Another hit over here, another hit over here. Suddenly, the market should be able to start doing the math. Okay, this thing could scale up. We could get 15, 20 million tons out of the next resource estimate. And it's still open at depth. So is that another 5 or 10 or 15 or 20 million tons added to that? So, that's what we've tried to do in setting up this idea of lots of information early on, building our confidence, getting better at what we're doing, and then coming back and really unleashing the exploration and testing a lot of different targets in a short period of time.
Well, David, I appreciate you kind of picking up the phone and talking to us today. Always intrigued when people get money, what they're going to do with it, because you got to create value. You got to, develop that growth story and get people to understand what it is that you're doing and how you're doing it. So get up with that. Stay in touch when you get some of these assays back or you get some of these results back. Let us know how you're getting on, okay?
You bet. Absolutely. It's always a pleasure.